Let's come back to Nigeria's securities market, where the regulator, the SEC, late last week rolled out a new set of guidelines for those who want to issue crypto assets, provide digital exchange trading platforms, or operate as service providers. Reading the tea leaves of the new digital assets rulebook for me on the show tonight. Now is Johnson Chuku. He's a licensed trader and CEO at Akari Asset Management. Thank you for making it on the show tonight. We appreciate the time. It's been a very busy day. Thanks for coming. Let me start by asking you, how would you summarize the essence of the new guidelines on digital assets, which was issued last year by the SEC?
Thank you, Bosin, for having me. The first thing that came to my mind is that SEC, the Securities and Exchange Commission, is actually moving quite fast to ensure that it align its regulations and guidelines in tandem with development in the market. By coming up with a regulation on the issuance of digital assets by companies, what he has done is effectively to bring an unregulated business into its regulation, because we've seen situations where a lot of digital asset operators have been issuing currencies and actually borrowing from the public, either in form of equities or in form of debt. But that has not been regulated. But with this regulation, we have now defined a limit that particularly retail investors, who are the most vulnerable in the case of failure, can now, the maximum they can invest in any digital asset.
Let's break it down. Who is authorized to issue a digital currency or asset? What platforms are permissible?
Well, anybody who is into issuance of token by way of raising funds by issuance of token, issuing initial coin offering, or who is offering the distributed digital ledger to the public and using that as a tool to either raise equity or debt from the market. Such person is expected is under the current regulation.
What about the rules around the custody of digital assets? If you're an issuer in the market under normal circumstances, like any issuer previously which are not digital, I'm sure there are thresholds set by the SEC.
Yes, in the first place, if you are issuing a digital currency, you cannot raise more than 10 billion within a 12-month period. And there are other rules. For instance, if your white paper, which specifies the architecture, the technology, the project you want to raise the money for, is going to be deployed, if the minimum limit you need to make that project feasible is not raised, which is what we call the soft limit, is not achieved, then you must return those funds you have raised within 5 working days. But most importantly, you cannot raise more than 10 billion within a 12-month calendar period through the issuance of digital assets. And that's critical because one of the things that SEC is trying to ensure that funds raised or as specified in the white paper are properly deployed, and there's a period for monitoring and to ensure that funds raised from the public by issuance of digital assets is fully in tandem with the white paper.
Interesting. Is it possible for an existing securities exchange to become a digital asset exchange? What's in the new rule book?
Yes, it is. They have to go through a certification on approval from SEC. And those guidelines are specified in in what SEC has come up with. An existing exchange can actually transform into a digital exchange, but must comply with the rules for a digital exchange.
Can you continue to trade perhaps securities, bonds, whatever, and just add Coinbase crypto assets to your existing portfolio of product offering, for example, as an existing exchange?
Yes, you see, the way we are going today, that has become inevitable because digital assets have become another class of tradable securities. And as it's now with SEC regulation on issuance of digital assets, then it becomes imperative that any exchange should admit that as a class of tradable securities. So it will be a different class of tradable security, but it will be traded digitally. Just like you find out today that a lot of instruments on the exchanges are now traded digitally.
But are these new rules by the SEC, are they consistent with other existing rules that are applicable to those of you who are market professionals already, those who hold licenses from the SEC, perhaps from the NGX, and perhaps others who are under the existing rules and guidelines of being a securities trading firm by the SEC?
You see, but basically what happens is that once any asset class is classified as securities, it will come into the trading purview of existing market operators. The next thing is operators have to scale up their competence level and skill sets so as to understand the underlying asset class and they understand the behavior of that asset class so as to be able to trade in them. What we'll continue to see is that the rules for trading, the requirement and qualification of traders will have to continuously be enhanced to be in tandem with development in the technological space. And as it stands today, the other day you and I were talking about call-over era, but today nobody's talking of call-over. And so that level of advancement will continue. And good thing is, like I said earlier, SEC is also open to adoption of technology, adoption of trend and changes in asset types and asset classes globally.
What is important for investors in digital assets in Nigeria? What do they need to know right now that the rules are all out and now the game is set?
Well, the first thing they need to know is that the limits. The first thing an investor should know is that you must first understand the underlying asset or the underlying project which the funds are being raised for. And that means you must first understand the white paper, which must have been approved by SEC before you make an investment. Secondly, you need to define, if you are a retail investor, you must make sure you keep to the limits that are specified for retail investors, which is 200,000 per asset class and a maximum of 2 million investment within a period of 12 calendar months. For HNIs, high net worth individuals, and corporate organizations who have the wherewithal to understand more of these asset classes, they don't have any limit to what they can invest. So an investor, I've always been an advocate that investors should first understand the instrument they want to invest before they put their money in it.
Know what you're investing in, and that's the first rule of the game. Okay. If you don't know, you can ask Johnson Choko. Thank you so much, a licensed trader, and see you at Carry Asset Management. Thank you so much. Have a great evening. Thank you for talking us through the new SEC rules on digital assets.